what is WPAY? WPAY is a fund of funds ETF. So it takes all the single stocks from Roundhill and puts into a basket of stocks, just like SPIY, just like, not SPIY, but just like SPY, QQQ, or any other ETF. Now this ETF came out September 4th, 2025, so it's still fairly new. The expense ratio is 0.99 basis points or 0.99% a year, but that's only going to last until the end of September. So after September, it's going to be 1.28%. As far as the dividend yield goes, we do not have a dividend yield yet because we just don't have enough payments. So I think when we have maybe 2 or 3 or 4 more payments, we will be able to figure out the dividend yield. Now, surprisingly, this ETF is passively managed. Now, each and every one of the Roundhill ETF is actively managed. So it kind of took me as a shock. So what I think is going to happen, all this is going to be on a computer. So what I think is going to happen, the traders they're going to set up the coordinates on a computer, and the computer is going to do the trading for them. And the traders, they're going to supervise the computer just to make sure everything is going well. This ETF is leverage. It's going to have a 120% exposure to the market, which can benefit or hurt you. Because the reason why it is leveraged, because all the single stock cover call ETFs in Roundhill, they are 120% leveraged as well. Now, these ETFs are also equally weighted, which I think is a good idea because there won't be any one single stock that's going to pull down the whole ETF. As far as the pay frequency goes, pay distributions, they're going to pay every week just like Roundhill ETFs, just like all the other Roundhill ETFs. I'm sorry, I can't talk right now. And they're going to pay every Wednesday. So now that we got the brief overview of the ETF, let's talk about the pros and cons. So let's start with the pros first. So the pro, and this is what I like, that it is an ETF. So again, WPAY is a basket of stocks that is in one ETF. So what I think this is going to do is going to reduce the risk, and it's going to stabilize everything a little bit more. Number 2, the second pro, that it is leverage. This is going to help out in a bull market. So whenever you get some capital gains, you're going to get 20% more, just because it's going to get 120% exposure to the market. And the third and final pro of WPAY is that it's going to pay weekly. It has the weekly distribution. It's going to pay every Wednesday. So you have that to look for. Now let's get to the cons. The most important con of this ETF is that it is new. So you have that new ETF risk. And the reason why this is super risky, because it just came out. It hasn't even been out 2 weeks. So we do not have enough data. We don't know how long this ETF is going to last. We don't know if it's going to last 10 years. We don't know if it's going to last 10 months. We don't know. It's just very uncertain right now. Now, the second con is the leverage. Now, I know we just talked about how leverage can help us and how leverage can boost our returns, but also leverage can hurt us when it comes to a bear market, when it comes to a flash crash, when it comes to even a recession. So whatever the market goes down, we're going to take an extra 20% hit, whoever's invested in these ETFs. Now, the third and final con is the distribution. Now, I think with WPAY, it's going to have a relatively high dividend yield. I think it's going to be anywhere from like 30 to 50%. I think it's going to match YMAX dividend yield. And why do I think this dividend is going to be in that range? Because if you look at the ETF that's WPAY, which is TSLV, TSLW, which is TSLV, POTW, which is Palantir, Misty, and Coinbase. These are all extremely volatile stocks. So extremely volatile stocks, they pay a high dividend yield, but it's going to cost. And what I mean by costing, if we have a bear market, these ETFs are going to go way down. And another point that I want to bring up is NAV erosion. I don't think the NAV is going to be stabilized. I don't know. I mean, it can erode. It can, even though YieldMax is not a leverage product, I have a feeling that WPAY is going to be eroding. It may not erode as much as YMAX. Who knows? Like I said, this ETF is still new. It's still new, so I don't know. Like, I could be wrong. That's it. I mean, the distributions are not going to be, it's not going to be stable. It's not going to be stable because due to the stocks that are in that ETF. It could be 30% one week, it could be 60% the other week, and then it could be 20% the week after that. So we don't know. So as far as my opinions on it, I think it's going to be like YMAX ETF. I know I'm kind of going back in circles and repeating, but again, I think it's going to be like YMAX ETF. I think it's going to have a little NAV erosion. It's going to be anywhere from 30 to 50%. Am I going to buy it right now? No, I'm not going to buy it right now because it's still a fairly new ETF. I want to give it a couple of more weeks so it can pay a few more distributions. What I'm going to do, I'm going to watch the stock price and I'm going to watch the distributions and kind of compare it to YMAX to see how it's doing compared to YMAX. So I don't know. Once when I find the yield, once when we get the dividend yield, I might put $100 into it. That's it, just because it's a fairly new ETF. And if it performs well, I might pump more money into it. All right, guys, that's all I have for you. If you guys like this video or found it informative, please like, share, and subscribe. Put it in the comments section if you like the video. What are you guys thinking about? What do you guys think about this ETF? Do you think it's a good investment? Do you think it's a bad investment? Please put it in the comments section. All right, guys, I'll see you in the next video.